Aloha, YouTube investors. How is everybody doing today? My name is David Yansen. Welcome to my channel. Today is April 26th. It is Monday, 2021, and we are going to be talking about ticker symbol TSLA. That stands for Tesla. They announced their earnings after the bell when the United States stock market closed. For me, it was morning time here, Hawaii Standard Time, but for the rest of the U.S., it was afternoon. But first, I wanted to share with you a really quick update. TrackYourDividends.com is a portfolio, or is a website, that I use to track all of my portfolios. This includes the free stocks that I got when I signed up with Webull and Doe Finance and a few others. I put all of those in here. And then my three main brokerage accounts that I use are M1 Finance, Fidelity, and Robinhood. So you can see here that my total gains is up again, $3,771. And my portfolio value has jumped a little bit, not significantly, but a little bit higher than the last video that I did for you guys, which I believe was Verizon and AT&T. If you'd like to check those videos out, you can see my playlist and stock analysis for 2021. You can see all those videos, or you can just check and see how my M1 Finance and Robinhood and Fidelity accounts have performed over the last year and a half or so. Almost 2 years since I started investing, in fact. But let's go ahead and talk about Tesla. Please subscribe to the channel if you haven't already. I do want to say mahalo. Thank you to everybody who has already subscribed to my channel and continues to follow the channel. And like the video as well. There is a thumbs up button down there for you to like the video. And like I always say, please feel free to share with your family and friends as well. And you can check the links in the description as well too. If you want to get a couple free stocks with Webull, or just one free one with Doe Finance, just for signing up. Robinhood, same thing, just for signing up. They'll give you a free one if you're not using that platform already. But this is Fidelity, where I own a little bit of Tesla right now. You can see my portfolio is it's down for the day, almost just over 0.5%, but I still have a little over $9,200 there, and I own a very, very small portion of Tesla in this portfolio. I originally bought in where I had about the same amount, not even quite a half a share, in the summer of 2020, and then my total gains jumped up to over $200, so I actually sold out of it, and I put that money and bought Costco. So my plan is kind of to do the same thing. I know long term I'm losing some money here, but I am primarily a dividend investor, so I kind of would rather get paid those dividends versus the capital gains. But I don't think it's bad to have some. And Tesla is such a high-flying stock already as it is, and still has a long way to go, in my opinion, as far as growth is concerned, and personally, I feel like it's okay with the little bit of money that I have to take it and put it into these other more solid dividend paying companies. So just kind of my strategy that I'm doing there. So right now, when they did not right now, but last year when they did the stock split, I bought back in some more. So my average share price is now $401. And so total value that I have invested in the company is a little over $184. And my total gains is up 83%. 83.74% is what my total return is. So my personal opinion, and I'm not a financial advisor, an accountant, or an economist, so please do your own research, and this isn't stock investment advice by no means. Do your own research, please. But my personal opinion, if you're doing kind of a barbell approach to investing, then you kind of want some of these growth stocks in there, just to kind of help prop up your portfolio. And you can also use those gains to buy more of these solid dividend companies, which I plan on doing on the next dip or the next crash. This Fidelity account is actually doing really well for me right now. The day didn't do the greatest for me today. As you can see, there's some red there with these other companies, but my total gains is all green for all of these companies, and then my total return is over 15%, down from the 16% in the last video that I did last week, but still over 15% in the double digits, which is nice to see. But let's go ahead and look at Tesla. They did beat on their earnings, beat by 15 cents on the non-GAAP earnings per share, and year over year revenue grew, and they beat by $110 million. That's from Alpha Street. And then if we go here and check and see how the stock has performed over the last year and year to date, Tesla doesn't pay a dividend because they are in super growth mode, just building factories all over the world and producing newer vehicles pretty much every year. But the stock grew over 400%, over 416% in the last year, and year to date it is up over 3.36%. So lots more growth for you for Tesla if you're a long-term holder. I am a long-term holder as well too, but I don't mind taking these profits from time to time to invest in other companies. So let's go over to Alpha Street here. This is their infograph. I use this website for a lot of these videos when I'm doing kind of a stock summary analysis every single quarter on these companies. And so you can see here, Q1 2021, it was announced, like I said, April 26th today. And revenue blew it out big time, grew over 74% to over $10.3 billion. Record numbers for their net income as well too, $438 million. This is a record. I saw a chart on CNBC that showed the growth from year to year and quarter to quarter with their net income and stuff. So not only is Tesla profitable, but they've got good numbers with the net income as well too. And I already mentioned to you the non-GAAP earnings per share there, 93 cents per share. Revenue component by percentage change, automotive sales, everything was in the green. Well over 20% for all of them. Automotive leasing was the least amount in gains, only grew 24%, which some companies would love if a part of their business grew only 24%. Automotive sales, which pretty much carries the company, up 78%, and then you can see the other areas as well. The other areas there as well grew almost 70% and 60% respectively. So as far as vehicles delivered for Tesla is concerned, and these are kind of some numbers that people pay attention to on a regular basis. And for me, investing in Tesla, that was kind of my thing, is they do have a cult following, like Starbucks, like Amazon, and like Apple. And their vehicles are cool enough and revolutionary enough to where everybody wants them. So, and they did this trickle-down effect with it as well, too. They started with these high-end, really expensive cars. They're driving around all over the place. The other person, sees it as like, oh, what is that? Oh, gold-wing doors on an SUV, bucket seats. They've got this giant 8-inch tablet sitting in the front there for you to use for navigation and air control and media and everything else like that. And then it just slowly trickled down to your middle class people. So now they've got a little bit more affordable vehicles out there. And so the numbers grew significantly. You can just see here from Q1 of 2019 was 63,000 vehicles were delivered. And now Q1 of 2021, over 184,000 vehicles delivered. And then as far as vehicles produced, grew as well too. 77,000 in Q1 of 2019, and now Q1 of 2021, over 180,000. So this is the main, obviously you want the company to be profitable, but when they're in growth mode, you want to know that people are using their service or buying their service, and that's been evident with Tesla from the day one. So the people who were very skeptical of them, and I was a little bit skeptical when I first started hearing about Tesla, when I started to invest back in 2019, but seeing the cars, they've got dealerships here in Honolulu. I went to the cars. I actually rode in a Tesla. My Lyft driver one time picked me up from the airport in a Tesla. I was completely blown away by the vehicle. And so I wanted to invest in them because I was blown away. Everybody else was blown away by how nice and cool their cars were. And now they've got kind of a quote-unquote cult following. Where people all over the world want to own a Tesla. In fact, in China, where there's tons of EV makers, and another company that I invest in, NIO, Tesla is still beating out all of those. And so there's not yet anyway, there could be later, there's not really even a national pride of, oh, we have to buy Chinese EV cars because they are produced here in China. They all still want Teslas. So looking at some of the other things here, operating income was up almost $600 million. Really important here for the future of EV growth, and part of President Biden's infrastructure plan is he wants to put charging stations all across the United States. Tesla's supercharger stations worldwide grew 41% to almost 2,700 supercharging stations. Operating expenses dropped 70%, which is nice, and then they still have cash and cash equivalents of over $17 billion. And margins was around 26.5% there. So Great numbers for Tesla. Of course, they were also highlighting the fact that the deliveries from their Berlin Gigafactory and their Texas Gigafactory will be delivering vehicles, producing and delivering vehicles here in 2021. So the 750,000 vehicles, the goal that Elon Musk wants to hit for 2021, it looks like it could happen. They came really, really close in the middle of a pandemic last year to delivering over 500,000 vehicles in 2020, which was his goal. And they were off by, I don't know, 3,000 or 4,000 vehicles or so. So now that things are heading back to normal and things are opening up and Tesla really pays no money in advertising, it's all pretty much social media and word of mouth, delivering that 750,000 vehicles and growing the revenue beyond this $10 billion, $10.39 billion, very much possible for Elon Musk and Tesla coming up here in the future. So look in the stock if you're not invested into them yet. Still good things to come from the company, lots of growth in the future. The stock could easily get to $1,000 in the next 3 months. Easily could happen. So even if you buy in now at $700, you can still end up, if the stock jumps up to $1,000 again, which it did previously in 2020, you've made some money. So just something to think about. But until the next video, everybody, mahalo and aloha.